Welcome to this video brought to you by ASWATAX, Chartered Tax Advisors. My name is Omar Aswat. Now, we'll be speaking about foreign tax credit relief. And you've heard the word foreign. And as you know, the UK tax system is extremely complex. And particularly when it comes to overseas aspects of UK taxation, things can get complicated very quickly as well. It's not straightforward, and many angles need to be considered when it comes to individuals and companies dealing with offshore aspects of UK taxation. Now, as I say, the UK tax system is complex, so I can talk a lot about foreign tax credit relief, but that's not the aim of this video. The aim of this video is to give you a broad outline and touch upon the basic points on the mechanisms of foreign tax credit relief. So as you know, an individual may be, or a company may be taxed on the same income or gain in two different jurisdictions. So in two different countries. So for example, in the UK and another country. And the UK has a method which is called foreign tax credit relief to avoid or to ensure that the individual or company is not taxed twice, or is not penalized twice on the same income or gains. And there's three methods. The first is by way of treaty relief. The second is by way of something called unilateral relief. And the third is by way of deduction relief, or relief by deduction. And we'll go through each of these in a bit more detail. But before that, we must, the individual must ensure that all steps have been taken to minimize the foreign tax before they can make any sort of claim for relief. So they must use all the reliefs and exemptions that are available in the offshore entity, in the offshore jurisdiction, to in order to claim foreign tax credit relief. So that's like a prerequisite of the claim. Treaty relief, which is utilized by looking at whether a double tax treaty is in place between the two jurisdictions, can be claimed initially or as a priority, and that is the lower of the maximum withheld tax on the payment or the maximum amount stated in the double tax treaty. So that's the first method. The next method to look at would be by way of unilateral relief, and that is a calculation of the UK tax paid on that specific foreign sourced income versus the overseas tax paid, and then the lower of the two can be claimed as a tax reducer. And the third method by way of deduction relief, which is not that beneficial unless we're talking about some sort of trading losses, for example. It won't be that beneficial, but effectively the way it works is you deduct the foreign tax paid as an expense against the income or gain. So if you think about it, if you think about the mechanics behind it, that's only more beneficial compared to the other two if there are losses, because technically you'll be increasing losses. So those are the three methods of foreign tax credit relief. In terms of how it actually works, it's treated as a tax reducer on the income tax computation, but it must be claimed after all other tax reducers have been claimed. For example, the EIS 30% income tax relief, SEIS 50%, VCT married couples allowance, and the rest of it. This will be the last deduction as a tax reducer on the income tax computation. I hope that makes sense. I hope you found it beneficial. Don't forget to like, comment, share, and subscribe to our channel, where you'll get regular videos on a weekly basis. Cheers, bye.